Hello, everyone. Welcome to today's webinar on preparing audit-ready financials, best practices to avoid common pitfalls. I'm glad you joined us today. Whether you've never been through a financial audit or have experience with them, you'll find today's information quite useful. My name is Jessica Lowe, and I'm with Sage Intacct, a provider of cloud financial management software. Our software has been helping finance teams at growing companies automate key processes and generate financial and business insights to help continue growth. I'll be moderating today's session and guiding through key topics, but really the featured speaker is John Mark McDougal. And with that, I'll turn it over to John Mark to introduce himself.
Yeah, good afternoon, everyone, or good morning, as the case may be. Thanks. It's good to be with you. My name is John Mark McDougal. I lead the accounting and audit practice for LBMC. We're located in Nashville, Tennessee, with offices in Knoxville and Chattanooga as well. We're around a 600-person firm and in the top 50 firms in the United States. I throw that out there primarily to give you an idea of what our client base and constituency would be. Myself, for me, I work primarily in the middle market. That's companies for us ranging anywhere from approximately $5 million up toward $100 million. That would be about 80% of those companies I work with, and that fit really well within the type of systems and software we're talking about today. Look forward to being with you and being any help I can. Thanks.
Thank you, John Mark. So now let's go over what we're going to cover today. We're going to cover some background information on the financial statement audit just to set the groundwork. And then we'll talk through some common pitfalls that we've seen and how to apply automation to address these pitfalls. John Mark will share his perspectives on what he's seen in terms of the audit process and how finance and accounting departments are operating today. And then lastly, we'll conclude with what is the role of automation and the role of controls. So those are really the key framing points around what we'll discuss today. Let's start at the foundational level. And if you look at the financial statement audit at a high level, the objective is for the auditor to give an opinion about the financial statements, considering whoever's reading the financials. And the accounting standard allows investors and creditors to understand a company's performance and compare that performance to other companies. But the key risk that every financial audit boils down to is the risk of a material misstatement in numbers. So the responsibility really falls on the shoulders of you and your finance team to ensure that the financials have a low risk of error so that you can receive that clean bill of health and unqualified opinion from your auditor. So what are some of the reasons for having an audit? Well, there's a number of reasons why you would need one, and different reasons happen to be associated with the company's life cycle. The most well-known reason for the audit is if you're a publicly traded company, the SEC requires you to undergo a third-party audit at least once a year by a public accounting firm. Privately held companies in increasing numbers are also subjecting themselves to financial audits at the request of different stakeholders and investors. And then lastly, there's situations where the IRS or maybe some other government agency would require an audit. So John Mark, what are your thoughts given the various reasons for an audit that some people should be thinking about these differently, or is there really some commonality in terms of processes that they should be thinking about across these audits?
Yeah, thanks. The audit process itself is supported by standards which govern all things audit related, in the U.S. and are covered by the AICPA standards. But in addition to that, many times within a public company setting, there is going to be a bit more documentation and potentially even lower materiality. It just depends on auditor judgment, but there is some additional scrutiny largely put on by or exhibited by the firms because they themselves are also scrutinized more by the PCAOB on those public company audits. So there is definitely a difference between the public company audit and the private company audit.
Great, thank you. So let's dive a little deeper into the actual audit process. Whether you're going through an audit because it's an SEC requirement as a public company, or you're doing it in preparation for a future event, the process can be similar. And it can be similar for public and private companies, but there's various types of risk that an audit will address. The primary area of risk assessment is that you're going to view your company's accounting and the process used to determine numbers on a financial statement. And an audit tests various areas of risk to get an overall comfort level of your controls, accounting, and reporting processes in order to issue their opinion on conforming with accounting standards. And at Sage Intacct, one thing we hear from finance leaders is their desire to have effective controls around their accounting and financial reporting processes, which helps reduce the risk of a material misstatement. So typically, an auditor would assess your company's control environment for risk. And then based on the results of controls testing, the auditor will perform some amount of static testing. And that kind of testing would involve checking calculations, examining records, examining source documents that support the balances in transactions, confirming balances with third parties and transactions where applicable, and maybe even physically observing assets as well. So if we think about what it takes to have audit-ready financials, it'd be helpful to have well-documented transactions and balances. So John Mark, a question for you. In terms of what we're looking at here as a high-level process and the pieces of the process, there's controls, there's substantive testing. What have you seen in terms of the relationship between those two, and what role do you see automation playing when it comes to the work and controls that's done around substantive testing?
Yeah, sure. The best audits and the best information that's audited, maybe is what I should say, definitely comes through a system that's tied together, and there's linkage from the front end to the back end from a documentation standpoint, transaction standpoint, and whether it's control testing, which can be important, or substantive testing, both of those need to be supported by the system. They're supported in different ways. Oftentimes, the substantive is based on analytics and other detailed tests that involve mass quantities of data, whereas the controls are more the day-to-day type things that are taking place and are built in. But both are critically important. The smaller the company, generally the more substantive the audit is going to be, simply because there may not be, even with a great system, there may not be the ability to have segregation of duties on the human side, and it just puts you in that position, and there's less reliance on controls there when you don't have the segregation of duties.
That makes a lot of sense. Thank you for that. So on audit challenges, I think there's certainly a role for automation. And on the software vendor side, I think that there's a difference among systems in terms of the sort of visibility that a system can provide into those next level of calculations that the system performs, especially on an automated basis. And it seems like it'd be a lot more comforting to know that it can make an audit process go more quickly, to know that you don't just have automation in place, but that you actually have visibility and transparency into what that automation is when it comes to looking at the details in the data. In an ideal world, you're going to have the audit focus on the risk of misstatements, management judgments, and the big picture. But what we hear sometimes from those who've been on the receiving end who are being audited is that they seem to notice a lot of time being spent reviewing support schedules, maybe going through spreadsheet calculations, and a lot of paperwork, if you will. And if the financials aren't audit ready, there's a lot of time spent doing data value and process verification. So, John Mark, based on your audit experience, what traits have you noticed in clients that can make a smooth audit?
Yeah, sure. The best audits, I think we would describe as of those companies and the information that, in a sense, is being audited every day, not necessarily by an auditor, but the system and the management team has a combination of processes, information, and checks and balances that guide toward the correct answer on a daily basis, weekly basis, and at the end of the month. Then at that point, when you get to the end of the year, the audit is, while it does take preparation time, and you have to extract data and various things from the system and provide auditors with information, it's not a brand new exercise. And so the best audits we see are those that are not just have good month-end closes, but there's a kind of an audit mindset on a regular basis through the company and the financial area as you go.
And you mentioned having a practice where some departments can do things on a daily basis or a weekly basis. If you're a small company, is that something that's possible, doing something on a daily and weekly basis? Or is that something that might be privileged for larger companies who might have more resources? What's kind of your take on that?
Yeah, when you say small company, I'm gonna take some liberty with that and go pretty small and say, there's a very small staff, maybe one accountant and or could be a controller, may also in a smaller setting or a startup context be someone more bookkeeping that is not in a controller role or that type of thing. So they've given a variety of roles, but absolutely there's going to be less time and less personnel to exhibit daily controls, but the system can help you in that regard in some aspects, but also there are weekly things that you can do, and typically we look at businesses and just like Intacct would and with KPIs and determine not only what controls are important, but what KPIs, because those KPIs should allude to you as to whether there's a problem or something going wrong just from a high level and analytical view. That can be very helpful on a weekly basis. So sometimes when we say controls in the accounting mindset, we think something that's just, like really hard and fast and black and white and either checking a box or not checking a box or something signed or not signed. Many times controls are of a monitoring nature, and information analysis and data analysis and fluctuations and things like that can be very helpful, and that's a form of control.
Great. So now let's talk about getting organized. In order to keep the audit focused on the big picture, it's really important to logically organize all of your transactions. Think about a sales quote that becomes a sales order, and then there's a shipping document to revenue being recorded, and then the cash being collected. And also you want to be able to start with the financials and go backwards, trace everything back to this general ledger, back to the subledgers, down to the supporting documents. And this is the key to any successful audit experience, how seamlessly or how quickly you can get this kind of process visibility. And by establishing a complete path from transaction to report to reconciliation, as a finance accounting team, you're really helping ensure that the auditor will be easily and effectively able to test your organization's accounting process. And so, John Mark, what are your thoughts on how you would advise a company to get organized in terms of all this documentation, especially if it's for a client that maybe hasn't been through an audit before? What are some of the things that you would offer as advice in that scenario?
Yeah, the first thing, as we mentioned earlier, is some of those checks and balances as you go along the way, so there are no surprises at year end, whatever that may look like. And then, but in addition to that, generally most auditors would prefer to have all the information they've requested initially available upon arrival, or if they're not arriving on site, there's a lot of remote auditing these days. For the time scheduled with the client to perform that work and to be involved with the client's financial information, to be ready and prepared at that point. The smaller the company, probably the more important this is, because once you get started auditing, there are additional requests that are going to come about through samples and questions and understanding that's needed, that's going to be obtained from the client. And if you're not ready pretty much on day one to go, then you're trying to continue to prepare yourself and get ready for the auditor while at the same time answering questions that are coming in, and it really causes a bottleneck. So first and foremost, we'd recommend coordinate the timing, obtain a really, really strong list well in advance of the audit from the auditor of as much as possible. And we find those go better. And even when there are difficult areas to audit or new areas in a given year to audit, to the extent that we can make those requests of clients a month in advance, they are much more open to providing the information and helping us get there, and they are a happier client than if we come in and find those things that we need much later in the process while the audit is ongoing.
Thanks. And a follow-up to that, we've talked a little bit about automation and getting organized. How do you answer the question from a client or from an accounting department when they say they'd like to be organized, but they're not sure if their accounting system makes it easy for them to do that? In terms of the role of the accounting system in getting organized, what do you think accounting teams should be mindful of or look for?
Sure. I think reporting, not just in terms of financial reporting, but reporting at the subledger level of information is imperative. I think the format of data that can be easily exported. A lot of times Excel gets criticized for being its own type of software for a lot of companies. And if you have data in a good format in the system and it's friendly and it can be kicked out to Excel, that's great. The first line of defense in any system is just what the system has itself. As I mentioned, the basic reports and the data structure of it. to be able to, be linked all the way from front end to back end, and have the information readily available. So as you mentioned earlier in your comments in passing about the sales order and following that all the way through, to the extent that, items can be, for lack of better words, clicked once and drilled down on and get additional information, without having to go to different modules or different screens or that type of thing. Very helpful. It can be extremely helpful for the company and for the auditor as well. We're not always inside the client system as much, but it can really save clients a lot of time.
Definitely. Thanks for that, John Mark. Okay, so let's move on to the next topic, the common pitfalls. So we've talked a little bit about getting organized, automation, and systems in general. Now we're going to get to the main event, some of the common pitfalls that we seem to notice the most during the actual audits themselves. So when it comes to audit complexity, certain areas appear on our radar here at Sage Intacct as a technology provider because there are pieces that people struggled with doing manually. And what we've been hearing is that thanks to technology, accounting departments have been successful at taking on some of those challenges, namely in these three areas: revenue recognition, receivables, consolidations. And at the same time, there are some things that are happening in the accounting profession today, or maybe even in the business, that might be making something like revenue recognition more complicated in terms of how companies are going to market with their offerings, or how they're going to come up with their pricing terms, set the terms and conditions with their customers, or how they're going to compensate their sales teams. So we'll go into some of those things in a little bit, but in general, those are three areas where things can really slow down an audit or complicate an audit. So John Mark, how are you seeing these things pop up in terms of where clients seem to struggle?
Yeah, so revenue is the hot button of any audit. The standards are written that way, business operates that way, and auditors think that way as well. A lot of times I'll say consolidation equals frustration, not just that communication can avoid frustration, but if you have a system that doesn't consolidate well, or if you're dealing with information that's just in different systems, you're almost automatically flipped into one of those Excel exercises. So we're really, really big fans of a system that works on consolidation. Manual consolidations can be a ripe area, very ripe area for human error. And when things don't eliminate, for some reason it always, not to make light of it, but it never seems to be an increase to the income statement. It usually results in some hanging debit somewhere that's going to cause a surprise. In revenue recognition, it's just inherent that you're going to deal with that. It's going to be very significant for clients and auditors.
Yeah, so let's start there with revenue recognition. If a company has multiple element arrangements, such as selling software and associated services like implementation, accounting departments can have a lot of difficulties determining rev rec, especially when it comes to things like timing and reporting. And ASC 606 compliance can have a big impact on your accounting operations depending on the nature of your business. So, John Mark, let's go right at it with your perspective on ASC 606 and what it means to audits. What's the thing that you hear the most often from your clients regarding ASC 606?
I think it brought a full spotlight on the contract that is between the client and their customer. And so the only real way to follow this standard is to not assume too much, and really for the auditor to go in and for the client to go in and look at the contracts and see what the contracts say. And I think many times in whether it's a good or a service, we assume that sales orders are uniform throughout the company, or that purchase orders are uniform, or that the language that might be inherently accepted between a customer and or our client and their customer may be inherent in the business as to what's going on, and there's not an embedded contract. But the reality is there is a contract. In all business there's a contract. Some of those may be written, some may be electronic. But I think the most surprises that we've found are that when you really get into the contract and people start looking for those, particularly in areas where you think it might be easy, if you're shipping a good, if you're performing a service, a lot of times there are things in those contracts that alter the revenue recognition based on these standards from what might have originally been planned or has been historically accounted for by the company. It's all about the contract.
That makes sense. And how would you advise firms stay audit ready in this area?
Sure. We've been talking with clients about this for a couple of years. The standard has been out there for quite some time. Systems have to have the information available, whether it's recognized immediately or whether there's alterations involved or adjustments or things like that. But the systems have to capture the information, and well-linked information, as we talked about, is key in all of that.
Now, last question on the subject before we move on to the next pitfall. What are some of the things that someone who's going to be new to an audit should be thinking about when it comes to RevRec, as maybe the top one or two things they should keep in mind as to how they can prepare for getting audited for revenues?
Sure. I would spend time with the auditor ahead of the audit, whether it's in preliminary or in the quote off season, if it's a 12/31 company, through the summer and fall, typically noted to be that if it's a 12/31 type year end, and spend time ahead with the auditor, gather information as much as possible and do as much of your own assessment as you can, and identify what your system can do for you and know what it can't do for you. And do that well in advance. And then that leaves time after a good assessment, that leaves time to respond and to be able to accomplish any goals or remaining objectives or tasks that need to be to get the auditors comfortable when that time rolls around. But I would definitely involve the auditor in the process. And if the client, can do most of the work or be involved in most of that, generally you can look at this unless there are just many different revenue streams inside a company, which some have, but most companies follow a pretty consistent path on the revenue that they recognize, unless they have, variation in contracts by salespeople or something of that nature.
Perfect. Thank you for that. Let's move on to the next pitfall now. Okay, so for many, receivables are another challenge. Companies can spend a lot of time and effort ensuring their customers are invoiced accurately and in a timely manner. How do they do their billing? How efficient is your billing process? And this becomes particularly important, especially when there's cash flow reasons behind it, because obviously the collections are what these companies are going to need to operate their business. So that's certainly important in terms of making sure that you have billing accuracy. But one thing that might be overlooked or not maybe given enough attention is the realizable value of these receivables. And the realizable value of a receivable can vary from industry to industry, depending on what the nature of that business is. There's some judgment that's needed to calculate an allowance for receivables that are uncollectible. The best accounting software should be able to keep track of your transaction details for as long as you need, and it can give you access to those customer histories so that you can figure out what your collectability is. And those are things that we think are worth keeping in mind when you want to show auditors that your judgment is well-founded. Being able to have the historical information to back up the allowances or what you think is going to be uncollectible. So that's net realizable value. Now let's talk about cash collections. There can be a lot of challenges here, especially from an operational day-to-day perspective, because you have customers that may pay for multiple invoices at once. And if there's a payment that covers multiple periods, the accounting department will have to go through a matching exercise to take a particular receipt and be able to identify which specific invoices these relate to. And then you have to be able to communicate that to an auditor so that the auditor understands how all the tracing is being worked out. And so when we think about being audit ready, accounting software can help by, say, automatically applying a receipt to an invoice. Perhaps it would be ideal to start with the oldest invoice, taking into account late payments or taking into account partial payments. There's a great deal of value that can be gained from automation, especially when you can't really anticipate how your customers are going to pay you. So that's what we've seen in terms of the difficult parts of accounting for receivables. John Mark, what are some of the things that you've seen in your experiences that make receivables a pitfall for an audit?
Yeah, probably the the most problematic things we've experienced with receivables I'm going to go in the middle market or non-healthcare industry. We refer to it often as the middle market, non-healthcare industry, is cash application and the ability to adequately match invoices, cash, or even EDI payments, matching depending on how the payments are being received, or ACH. If you get into a situation where you've received cash and you have accounts receivable, you're having trouble joining the two together, it can create some significant problems for determining the true condition of the AR in terms of collectability. And just being able to look at an aging and that type of thing, that's probably one of the more serious issues that we run into on a regular basis.
Yeah, and that's something we think is going to be important. And in terms of the applications of those payments and what they mean for the company, can you talk about what the value of these receivables are for a company that's maybe trying to fund a strategic initiative down the road? One thing that we hear from CFOs is that they like to be able to come into the office every day and see what their cash is and what their forecast looks like, because they're thinking about something down the road in which they want to use it. So can you comment on the relationship between these receivables and these bigger initiatives coming up down the road for a company?
Yeah, I mean, receivables, sure. One of the receivables are one of the primary components in most companies of working capital. And, working capital, either shortages or challenges can create a significant roadblock for a company, particularly in its early life, or in smaller companies, and trying to convert that to cash and remain liquid. So having good reporting, as you mentioned, CFO's interest, having good reporting of that and the condition of the aging and being able to spot deterioration in the aging or the accounts very quickly can be the difference, particularly in smaller companies or thinly capitalized companies, between life and death.
Yeah, that's definitely true. Thanks, John Mark. Let's move on to our next pitfall. So we've talked about RevRec and receivables. For a lot of companies, consolidations is another area of complexity. And at Sage Intacct, what we've seen is sometimes companies without many employees are actually going multi-location at an earlier stage in their life cycle. These aren't the largest companies that you think of, but the smaller ones in terms of headcount. And technology has made it very feasible for companies to go global much more quickly and operate in a geographically dispersed manner cost effectively. And we've heard of issues around consolidations. And these are companies that need to report on a single set of consolidated financials for multi-entity business. And with multi-entity, think legal structures, think locations. And we hear about the pains when these entities have to do intercompany activity with each other. And tracking intercompany activity can be a very manually intensive exercise, especially if it's something that you report once a month and yet you do a weekly check run. You've got this timing challenge that you have to work with, and that's not always easy. And also, accounting departments, when they do their reporting, they've talked about massive spreadsheets to do consolidations. And oftentimes there's a situation where when you're in different locations, maybe even different instances of accounting software that's being run, using spreadsheets to manage all this information can be pretty complex. And they want to get rid of these things because they're burdensome from a time perspective. And on top of that, they're not easy to understand, or they can contain errors. So we've heard stories where there were accounts missing, changes to the charts of accounts, the maintenance aspect of it. It just makes it hard, not just for the accountant, but imagine an auditor who has to come in and untangle all this and try and follow it. So it's probably not ideal to get into a situation where you have just a concentration of one or two people in an accounting department who really know how that spreadsheet works. Automation can certainly have an opportunity here to make life better if you have currency conversions and transactions, if you have allocations for complex ownership structures. Some of these really complex and burdensome calculations that are just not easy to handle when you deal with spreadsheets. So, John Mark, in terms of the challenges of consolidations and things that you've seen come up, what are some of the things that come to mind when you think about consolidation pitfalls?
Yeah, I mean, as I mentioned earlier, the system-based consolidations and automated consolidations are the best by any means. Even then, it can be challenging to be able to take that information if you're adding general ledger accounts and taking that information and when you add general ledger accounts, and they have to be factored into the consolidation and changes made and things like that. So most of the time, the manual consolidations, even if there's some element of manual involved, to the extent that a company can sit down and work through some of these items or maybe automate even a portion of them, everything that's automated just reduces the risk of human error one by one. And so I would highly encourage as much automation as possible, and a few hours spent trying to automate or even days spent trying to automate can really, really save time down the road.
Yeah, for sure. And a follow-up to that. One of the things that always comes up in consolidations reporting is that the readers of this report, the management team, the boards, what we hear is of their eagerness to get results quickly and have those numbers. Can you speak on what those conversations are like with accounting departments who feel like they're stressed in terms of trying to get the numbers out the door? Is that something that you hear about, that they can't get them out the door quite fast enough?
It's interesting you say that. We watch them do that, and it feels like the auditor sometimes when you're trying to turn around things if you're given some information and now it's time to flip a new set of statements or a new set of information to a client. It can be challenging annual processes for the accounting group to stop what they're doing and make changes and then be able to produce a new set of financial statements. It's probably one of the key drivers, not just even if you don't have errors or aren't concerned about the risk of error, the time alone spent in doing updates. And it's pretty rare, I think, that the first set of financial statements or the first draft is always the final draft, especially the more complex a company gets. Every time you do that, it begins to be just an additional manual exercise you have to go through. So it's very significant. Good point.
Wonderful. Thanks for sharing that. So what's the common theme? We talked about the ease of use of a financial accounting system. We talked about automation. And it's not just having automation, but making sure you have something that's easy to use and making life easier for yourselves and also for your auditors. So automation helps because one of the keys to a successful financial audit is to organize and document transactions, but with a clear audit trail from the financial statement all the way down to the transactions for some of the supporting documents. It has to be clear because you want something that's going to be relatively easy for an auditor to understand. And the more automation you add to your process, the less you have to rely on manual spreadsheets and support schedules, and the better the audit experience is going to be. And when you have a process that's auditable, you'll be able to present your information in a timely manner, which is where certain kinds of accounting software can help. A system that's well organized takes up less time and lets you be more responsive to an auditor's request for information. So automation can help accounting departments go more quickly. It can help reduce the amount of time spent on fieldwork and testing, and make it easy for your auditors to start fieldwork sooner for certain areas. So there's efficiency and accuracy gains that result from moving on to automation, and they can outweigh the cost of moving away from spreadsheets. Technology can really allow audit work and your close process to overlap. So, John Mark, any last words on automation?
No, just other than the obvious that once you do that, the accounting department, financial professionals, et cetera, are key elements and components of the business. People want their minds in the room. They want to hear from them. They want to know their opinions on things, and you'll be much more accessible and much more valuable to the business the more automated that you get. It's probably cliche, but we visit with a lot of people through the year that are involved in audits and running the business and the companies, et cetera. And, the theme we always hear is that, we all need more time, but automation helps the time. The more time we have and the less we're worried about those things, the more we can help the companies that we're trying to grow and protect and defend, et cetera.
Yeah, that's definitely true. So to get to the close of the webinar here, I'd like to just share some perspectives around automation. So we've mentioned it can make life easier for your auditor, remove the risk of error, and help you spend less time on doing some of the checking and rechecking of things. And we've talked about how audits, when they're successful, they can really hinge on the ease of tracing and auditability from the face of the financials to the source information and vice versa. An audit-ready system should be able to demonstrate those things. It should be able to prove the accounting path quickly and easily. And you want a system that can show you how transactions flow from start to finish, and even the changes that are happening during the life of the transaction. When you have consolidated financials, can you easily drill into the underlying source details that support the roll-up? How are your intercompany transactions being accounted for? And when it comes to controls and segregation of duties, what kinds of access do people have to your system and what are they permitted to do? And we've also talked about 3 areas of risk: revenue, receivables, and consolidations. And when you have an audit-ready financial system, you can leverage automation to deliver accuracy in your day-to-day and month-end reporting to avoid the common mistakes that you run into when you do things manually. And when it comes to things like revenue recognition, automation can help things like scheduling calculations and postings in accordance with the latest accounting guidance. Transactions like order to cash can be handled so that you should never have to re-enter the same information more than once. Then when it comes to consolidations, you don't have to wait until the end of the month after all your weekly check runs to post your intercompany activity manually. A system should be able to do it for you the moment that transaction occurs to keep the possibility of human error to a minimum. And lastly, if you're not thinking of a cloud accounting system right now, but are looking into it, there are some reasons to think about the cloud, from IT reasons to business agility reasons. Our customers have said that moving to the cloud has been helpful when it comes to audits, not just running the business. Giving auditors easier yet secure access to read and investigate the data within your systems. Having control when an auditor accesses the system for quarterly and year-end exams. And of course, having the auditor be able to click through any figure in your financials all the way down to the GL to the source transaction during fieldwork, which gives the level of confidence that your auditor should have. As we wrap up today's webinar, John Mark, we've talked about how automation delivers traceability, accuracy, and timeliness, especially in areas of accounting that can be complex when it comes to audit. We've talked a little bit about software and how with remote departments, using the cloud can be of a benefit. Are there any parting comments that you'd like to share with the audience before we finish up?
I think just that, in the course of doing this call, and I mentioned earlier that our firm is located in Tennessee. We, as an accounting firm, that's the part that I'm in, but our affiliates work in the areas of, human resources, outsourcing, and investment advisory and technology. And, we found the product Intacct to be extremely helpful to clients. We're not only I throw this out, we're not only an advocate, but we drink our own Kool-Aid. We use the Intacct product ourselves, and we sell it. So we're big fans of that. We think that systems can really help improve the financial area and not only make companies better, but as we talked about today, in the brevity of time and the time crunch we're all under, make individual lives better at some level. In the essence of being able to accomplish more automated than we can with manual intervention. So thanks for your time.